So the dynamics when creating a cross-border restructuring, when the investors are beginning to understand and come to terms with the fact that a restructuring is required, they need to first of all look at the underlying assets, particularly when the assets are located outside of developed jurisdictions. And it is very important to start with a proper due diligence as to whether they actually have security over the assets that they believe they've taken security over. It's certainly been a pitfall that a number of investors have struck when they've come to believing they're secured and in a strong position in the capital structure have struggled when they've come to actually look to enforce. The second point I would make is that in a cross-border restructuring, there's often a lot of choices about the restructuring mechanic that can be used. For example, when you look at a European or an African producer, they might have the choice of maybe 5 or 6 different jurisdictions in which they're able to restructure, be it a Chapter 11 in the US or a scheme of arrangement in the UK, or indeed a local restructuring mechanic. And we spend a lot of time with investors and companies helping them to sort of navigate and find the most appropriate restructuring mechanic for the circumstances. Well, as for opportunities in 2016 and beyond, and I'll focus in on mining and metals being my space, I think what we are seeing at the moment is that sort of bumping around on the bottom of the market. So the opportunities are firstly for those, there's been this real divide between the haves and the have-nots over the last 2 to 3 years as the super cycle has ground to a halt. For the have-nots, the opportunities really arise from comprehensive turnaround, comprehensive balance sheet restructurings that need to be done. And for the distressed investors looking to come into that space, really coming in at very, very low valuations and essentially taking an option on their ability to revolutionise the operations and also a bet on the underlying commodity price. For the haves, I think this is a very interesting time as well, because it is the first time in a long time that good assets, arguably some tier 1 assets, have come onto the market. And so for the strongest players in the sector, as we begin to come off, arguably the bottom of the cycle, or at least bounce around on the bottom of the cycle, that there's some opportunities to acquire assets that they have coveted for a very long time and have not come to market in a very long time. Well, I think the most interesting thing is that we all had different opinions, which is great. I think, again, being a distressed panel, we were obviously all pessimistic to differing degrees, but each of us sees opportunities in different commodities and different jurisdictions, and particularly for those who are willing to put equity capital down at this point in the cycle, there are some true opportunities. And I do think that actually united us, despite the fact that we were identifying slightly different opportunities amongst the group.